equity markets have changed very materially in the last few years. If you take MSCI China, for example, which is a big index that we track here in Hong Kong, 35% of MSCI China is two companies, Alibaba and Tencent. And these are the answers to the kind of Alphabets, the Googles, the Amazons that the US have. And these companies are genuinely quite immune from economic circumstances. So I think we've got a very specific situation, not just in Asia, but also in the US, where equity markets are very, very concentrated into some very highly valued companies.
And do you think that that would be the trend into the remainder of this year as well, where the market rally remains skewed?
I do think so. If you take Asia that we look at from here in Hong Kong, I mean, Taiwan, for example, you've got one company, TSMC, which dominates the index, 30% plus. In Korea, Samsung Electronics, 25% plus of the index. And these companies are seeing good trading conditions, and I don't think that will go away. I think the other point to make is that looking at equities as an asset class, equities is a beneficiary of the fact that the bond market is just not attractive right now, especially the government bond market in a low interest rate environment. So I think what you're seeing is that conventional asset allocation strategies are being challenged. And in the past, most pension managers, for example, would put 60% of their fund into equities, 40% into bonds. I think increasingly more and more will go into equities. And I think Asia will be a beneficiary of this because Asia, I think, is showing a better performance in terms of dealing with the current pandemic relative to Western counterparts. And Asia is a cheaper equity market. So I think that will probably keep some fairly healthy demand for Asian equities between now and the year end.
Yes, it's interesting, Jim, isn't it? Because I hear that you're saying, look, the narrow gains in the market are a little bit concerning. But as you say, other people are saying there's really nowhere else to park your money. So, I mean, if you are having a preference for Asia, where specifically would you be looking regionally?
Well, I think our preference has been and probably will remain North Asia. I think if you look at what's happened, you've had this concentration in markets over the last few years. Whereas if you're looking at Asia, ex-Japan, ex-Australia, it's really three countries. It's China, Taiwan, and Korea, which are 80% of the index. So we tend to quite like China and Korea of those three markets. Elsewhere, Japan, we do see some attraction there. So while Japanese earnings growth will be, I guess, cut because of the pandemic situation, but we've also got some really exciting trends happening in Japan. One is dividend growth, and something we wrote about recently highlighted that Japanese companies have got the best dividend growth prospects of any market globally. But also in Japan, you've got M&A potential, and I think we're seeing some outbound M&A happening right now. We saw it the other day with an acquisition from 7i Holdings, but I think we'll see a lot more domestically oriented M&A in Japan, and that will be a stimulant for the Japanese equity market too.